Hello, everyone, and welcome to our Advance with Finance webinar. My name is Sophie, and I'm part of the communications team at BrightBearsInfo, and I'm going to be the co-host for today's webinar.
Hey everyone, I am Vaishu and I am part of BrightBearsInfo's communications team and the other co-host for this webinar. Today we have three amazing guests who will be answering any of your financial literacy questions. Sophie, why don't you explain who we are and what we do?
So for anyone who doesn't already know us, we are BrightBearsInfo. And before we begin, here is a word from our founders.
So, Bindu, can you start us off and tell us who you are and how you got started in the financial industry?
Sure. Thank you so much, Vaishu. Good evening, everybody. My name is Bindu Vedagiri. I have a master's in business administration from India and finance as a major. I did finance throughout my my education as well as my career. So yeah, I really like being with this finance industry because that's what I've been reading and working on. So yeah.
Okay, Raj, why don't you introduce yourself next?
Absolutely. Hi, everyone. Great to be here and tell you a little bit more about myself. Basically, I used to work as a financial advisor. I started working as an advisor in 2014 with a Canadian bank. And over there, I realized that a lot of people needed financial literacy education. So I'm a passionate musician. I've been a music teacher for over 12 years. So I kind of combined my education background, my finance background, working as an advisor, and I started my company WalletWiz, which is a financial literacy education company that aims to empower people to become financially independent. So I'm really excited to be here to talk to you all today.
And lastly, Vincent, why don't you finish us off with the introductions?
Yep. So good afternoon, everyone. And my name is Vincent Lee. I actually have an engineering background. However, I kind of get bored about after starting and working in the industry, and I feel like more fulfilled when I actually can helping family to get over their financial status and help them to build a solid financial foundation. And I'm quite passionate about this industry right now. Thank you.
Great. Now we are going to start off with an activity to introduce our topic for today and get to know our audience a little bit better. On the screen, you will see the website where you can access the activity along with the code you need to enter. So please just go to menti.com and the code is shown on the screen. So as everyone can see, we have a word bubble being created here, and the most common answer will be shown the biggest. So we have, I can see stock, paying taxes, money, investing, credit scores, money habits, budgeting. Okay, thank you to everyone who participated. I see a bunch of words. And as you can see, the word that comes to everyone's mind when they hear financial literacy and is the most common answer is budgeting. And I see girls as well. So now we'll get started with Himabindu's section.
All right, yes, basic banking. So firstly, let's discuss one thing. Why do we need a bank account? So we need a bank account, especially for the students. Why do you think students would need a bank account? Firstly, it will help us to learn how to manage your money and also the security to your money. It is always not advantageous for you guys to hold on to the cash in your hand and make the transaction. And it could be a chaos for after some time. So it would be great if you could deposit your cash into the bank. And then from the bank, you can use those funds to pay off your expenses, if any. So to begin with, so ideally the students will get, you can open a bank account using your parents' reference. So once you can ask your parents to refer you guys, and you can start opening your bank accounts, and there will be a bank accounts which are stitched or tailored for students' needs. So which will have a minimum balance which is required to open a bank account. So probably you guys can talk to your parents' bank account bank maybe bank account facilities who provide the bank account. You can open the bank accounts there. And I'm sorry, I'm actually nervous. Okay, so you can open a bank account and you can take it from there. So ideally there are two types of bank accounts. It is checking account and a savings account. In checking account, so when you open a bank account, that will ideally be a checking account, which will have, you will pay a lower interest or should I wait for the slides to come up or should I just start speaking?
You can go ahead and speak. I guess we're just having some technical difficulties, but go ahead.
All right, okay. So let's speak about the checking account. So for checking account, it's like you deposit the amount into the bank and the bank will give you certain set of facilities in the because you opened a bank account with them. So that could be like giving a debit card. It could be like giving a checks or giving an overdraft facility for you guys. So that'll be like a checking account. Like what is a saving account? Saving account is a place where you deposit the money to save your money from the expenses. Like you pay the, like for example, if I say I have $100 as income and I want to spend 85% of it and I want to save the 15% of it. So I would actually deposit the 85% into the checking account and I can 15% of it I will deposit in the saving account. So savings account ideally is an account which is opened in the bank and they will pay an additional interest just because you're saving the money, you're depositing the money in the savings account. The major differences would be like checking account will not pay any interest income or very lower interest income basing upon the what kind of account or banks you're opening with. And the savings account will have interest provided, as well as the checking account will give you the debit cards. I will talk more about the debit cards in short. So, and the savings accounts will not give a debit card or sometimes they will give the checkings, but mostly they will not give the checking facilities. They will also offer basic services, checking on basic services like withdrawal, additional withdrawal, which is called overdraft, which means like, for example, let's say I have $100 in the bank account, but I have expenses of $110. So the bank will give an overdraft of $10 more. So, and it'll pay on your behalf. But what will happen is next time when you deposit $100, only $90 will be available for you to spend it out. That facility is called an overdraft facility. So that is also one of the facility available in the checking account. And in the check, they will charge few fees for that, some amount of fees for the checking account as well as the savings account as well. Usually allow more free transactions. So checking account is like a day-to-day transaction account. So you can deposit the amount, you can withdraw the amount. Like, for example, you can deposit, for example, you have a job and you're having a monthly check deposited into your bank account. So what will happen in that case is the amount will be getting a deposit in your account, and you have a funds available to make a payment out of it. Like, for example, if I have, because you're a student, if I have a summer job and my employer is depositing their salaries into my bank account, I would, that's my salary, which we deposit, and I can pay off my expenses using that. So these are like multiple transactions will happen in the checking account versus the savings account. Savings accounts will be like you just deposit money for the future purposes. You're not going to touch it often, so there'll not be many transactions as such in the savings account. But yes, definitely the checking account, you will have multiple transactions. Then next step would be requirements of opening the bank account. So what would be, how would I open a bank account? That would be my first question. So ideally, as I mentioned earlier, probably you can ask your parents to refer you guys to open a bank account for yourself. And you might have to go in person to the bank and give a valid identification so that they can open a bank account for you. In Canada, you have a right to open a bank account at a bank or federally regulated credit union if you show a proper identification. So that's your right, guys. So you can go ahead and open a bank account if it's required to. The next topic is debit cards. So what is debit cards? How would you get a debit card? As I mentioned earlier, you will receive a debit card once you opened a checking account. So that is actually an electronic card, which will be form of a plastic money, I must say. So in case you don't have to carry the cash everywhere you go to make a transaction or to make a payment for any vendor. So what you can do is you can just show, you can present the debit card and you can make a payment. You can also deposit, withdraw cash, pay bills, transfer money, if any. And also you can get view of your account from the ATM, which is called automated teller machine, which is called ATM. So how the debit card works is when you open a bank account, the bank will be giving you ATM, the debit card, as well as a PIN. That PIN is like your security PIN. You're not going to share that with anybody, and you're going to memorize that number, because whenever you are using the card, you are going to use that PIN to make the transaction. So that's one of the thing about the debit cards. Also, you can withdraw the cash also. So for, let's say you have amount in your bank account, you wanted to pay the vendor, you can give the debit card. But what if you need to pay a cash to somebody? You still can go into some of the financial institutions' ATMs and withdraw the money from your bank accounts. So ideally, what is the concept of debit card is? That is like whatever the funds which are available to you. It's not like it's coming from somewhere and you're getting the money. It's nothing like that. But what is your own money which is being deposited into the bank account, you can withdraw it and make payments accordingly. And the control is in your hands most of the time. So let's discuss about advantages about the debit cards, if any. So first and foremost, that would be I don't need to carry cash, which will make my life easier, because that could be sometimes I might lose the cash. I just want to keep myself secure. So I don't need to carry a cash. So I want to take a debit card with me. And some people would not prefer to apply for a credit card just because that kind of chaos will apply in case if you don't pay the credit amount which you're going to get in a given grace period, there would be additional interest accrued. So some people would not prefer to carry a credit card. In those cases also, you can take a debit card along with you to make up purchases. And it'll prevent you from spending the money that isn't your account. So that's a great point. Like for the budgeting, it also actually, it can tell you that what is like needs and wants. So what will happen is, in case whatever funds you have, whatever you need, you try to buy, not like whatever you want, you would try to buy, because whichever is important for you for that time that is what you're going to use the debit card for. So we will discuss more about the credit card and wants and needs in a bit. So those are some of the advantages of the debit cards. What are the disadvantages of the debit cards is like maybe a slower than using cash, like instantly having a transaction or like exchanging the goods for the cash is a lot easier versus trying to use a debit card and making the transaction happen. So that would actually be slower compared to just direct giving the cash transactions. There's a charge fees, obviously, that because the debit card is one of the facilities available to you by the checking account, and the bank is going to charge fees for that. So card readers sometimes misused for fraud. Yeah. So what will happen is, as I mentioned, the PIN number. So you have to be very careful with the PIN number when you use a debit card. If you want to withdraw money, there you need to enter your PIN number. And if there is somebody standing behind you, or somebody get the PIN number of yours, it's a lot easier for them to withdraw money from your account because they have the PIN of yours if they just get the debit card of your debit card. So there could be a fraud, a lot of times happen. So you have to be careful with the debit cards, and some of the sellers don't accept the debit cards. This happened in my case personally because I had to pay for some of my exams. They don't accept the debit cards for some reason. They just need a credit cards. And I think most likely that would be the reason is like they wanted to know your credit. How is your credit score? How is your credit for them to get some kind of assurance? At least sometimes they only ask for the credit cards. Let's discuss something about credit cards now. So what is a credit card and how do I apply for a credit card? What are the advantages and disadvantages of a credit card? And I can show you a credit card statement, how it looks like. First, what is a credit card? So we discussed about the debit card. It's an electronic card and you can make the payments using for the funds available in the bank account, right? But what is credit card? Credit card is like paying the, so for example, excuse me, if I want to buy something, let's say I want to buy a pair of shoes, it's costing me like $100, but I don't have the money with me, that's kind of money with me in my bank accounts. What I will do is I will use a credit card. So I will use a credit card and purchase those pair of shoes, but I will pay the money to the bank at the later time. So the bank will pay to the vendor on my behalf now, but at the later time when I have the money with me, I will pay back. Ideally, what will happen is there will be a grace period. You might have to pay back the amount, whatever you borrowed from the bank in form of credit, which is like, you're borrowing the money, right? So you have to pay back the bank in certain time, which is called a grace period. If you don't pay the amount by the grace period, there will be an additional interest charge on that amount. So that is not advisable. And so that is how the credit card balance will be like getting doubled, and it's not tough for you guys to pay back those debts, if any. So that is about the credit card. So ideally, the credit card is which allows the people to buy items without cash, or people can make a cash advances on the credit card. So so just like the debit card has a limit to to the extent whatever the funds available in the bank account in your name. But credit cards, how it works is they will have a credit limit. So basing upon the income, the bank will decide how much credit limit you have for you guys to make the, like they will see, for example, you have student loan probably with a lesser credit credit limit, they will give you a credit card. Like probably if your parents are there, they might have income and they will have a higher credit limit. So to that extent, they can take a credit and pay back. So what will happen is cash advances. Sometimes if you want to get back the cash instead of making payments, like for example, I have to pay for my house. I'm going to purchase a house. I need to pay for something for my registration cost or something. So whatever I have, I just gave a down payment. I need to make a payment for my registration. Then I can withdraw on my credit card, and I have to pay back on time, but the interest will accrue immediately for the cash advances. That is one thing which is available. How do I apply for credit cards? So ideally, you can apply for credit cards in any bank you have account with. So all your bank accounts are interconnected. So even if you have a proper credit score, which we will discuss about this later, the bank themselves will approach to you guys to apply for the credit cards. They'll be happy to give you the credit card. So so if this is the first time I'm doing, my parents are referring me to the bank account, I can go ahead to their website and fill the application online, and I can apply for a credit card. And probably they might need some documentation from them. I can provide it. But also there is an option to mail your documentation, but sometimes it could be that you miss some kind of proof to attach. That could be a chaos. So most likely it's the quickest way and advisable way is to apply online for the credit cards. And generally you are eligible to get a credit card at the age of 18. But in Canada, there are also, for the younger Canadians, there are credit cards available from the age 13 to 16. There can be authorized users on parents' guardian credit cards. So through your parents, you can get a credit card. Probably you want to talk to about your parents about it if you think it will be needed. Let's see. I covered that point. So let's see the disadvantages, advantages and disadvantages of credit cards. As I mentioned, first of all, the credit card is like the limit is like you don't know what is wanted, what is needed versus what is I wanted. So like, for example, the food, shelter and all is my needs. What do I want? Probably an additional pair of shoes or additional pair of dresses. That's a want. It's not an immediate need for me. So what will happen is in case if you have a credit card, the transaction you use, you tend to buy, you don't have a limit because once you, it's not like a debit card wherein you have only certain amount of money and there is a restriction on it. For the credit card, it's like you can go above the restriction and you can make the purchases but you have to pay at later point. But end of the day, we are paying the money, right? So that could be one of the disadvantage. But advantage could be like borrowing money as needed, carry cash less, and provides monthly statement. So this is one more great thing for at least budgeting, I must say. I mean, Ram and Raj is going to speak more about it, and the Vincent as well, I think. So, but for budgeting, it'll be a lot important if you know the statement, right? What you're spending a lot, you know? So when you look into the online, so same thing with the debit cards as well. So when you open your bank account, your bank also will give you an online banking facilities. So that will give you that PIN code for that as well. You might have to use it and you can log into your bank account and you can print out your statements from there. So which is like cool, so that even you can organize things, and you can also see where you're spending, where's your funds going on. So that statements, it will provide us monthly statements, which is really helpful for budgeting for the next month if you wanted. And convenient payment online online and phone, limited fraud liability, helps to earn good credit score. Vincent will touch base on this, but the credit score is basing upon the transaction you make. So there'll be a credit score which is building. So that is very important for you to get any kind of loan in future date. So it is great. It is actually best to build your credit score from right now. So that'll be like a great thing. I never got to know this unless I got my credit score built only from 2010, from the time I came into United States. So yeah, that's credit score is really important for you guys as well. So it'll be the better you start early, the better it would be. And there'll be other rewards and benefits also. So these are the few advantages of credit cards. Disadvantages may build up too much debt. So that's what I mentioned. We would not know what is needed and what is you want. So it can damage the credit score if it's not paid regularly. So as I mentioned, you might have to pay the money back if you don't pay back on time. Then there'll be additional interest accrued on the amount. So which is not, and if you're not paying it, then more additional interest, which is not, which would damage your credit score, and it's not a credit score and it's not advisable. Interest rate will be higher than alternatives, easy to buy small items that affect your budget when added up. So like, let's see, I have a credit card and probably when I'm looking at browsing in Amazon. So I'm actually looking up for, this is my own example. So I'm looking up for something for my son, like maybe a winter hat. Then I saw a pair of pants for him, then a shirt, then some kind of toys for him. Like I just kept on adding all the stuffs to my cart. Like actually, I didn't need all those things at that moment. I just need a hat, but I kept adding up all the items onto my cart and I ended up purchasing those on my credit card. Like it's a lot easier for us to get small items which that affect our budget. So these are the few of the disadvantages. And if you could see, I don't know if it popped up, there's a credit card statement next. So this is how your credit card statement is going to look like. So ideally it'll have your account number, your name, your statement date, and the payment due date, the new balance, and the minimum balance required. So these are important, guys. So what is the statement balance? It's like how much is the amount which is due, and what is the minimum payment due? Like minimum you have to pay this so that you don't accrue the amount. So let's see, these are if you see at the bottom, these are the dates on the transaction and what kind of the transaction you have. So this will actually explain line to line items. Even in accounting, there is something called journal entries. You pass journal entries basing upon the transactions, and that's how you build your your financials for the companies. But ideally, so this is how the transactions are. Like each and every transaction, you can see how it's going, to what account the payment is made to, and make sure you make the minimum payment due. So that is really required, or else you might end up paying interest. And so there is one more thing. Here's the credit available. So there's a credit limit mentioned in this on the top. I'm not sure if it's so clear. There will be a credit limit available, and as well as the credit available. So even on the statement, you can see how much of the credit limit is available for you guys so to that extent you can make the purchases for. The last slide would be the differences between the credit card and the debit cards. So let's see, what are the difference between the debit card and the credit card? So debit card, as I mentioned, that will be like, it will immediately transfer the money from banking account to the seller account, and you can't spend more than what you have in your account, and no interest is charged on the debit card transactions, of course, because you are not owing any amount in that case, right? You are using your own money. But in credit cards, it's not the same. In credit cards, you are actually taking money from others and you're actually repaying back it, right? So in that case, you may owe interest. In this case, you will not owe interest in debit cards. So transactions with the debit cards have fees unless you have banking account agreement includes some number of free transactions. So sometimes it will be a free transaction that you up to this level, up to so many numbers of transactions, we will not charge you an additional charges. So well, I think this should be, let's see, yeah. So coming to a credit card, you borrow money from the credit card issuer to pay the vendor, which we discussed about it. We can continue to use the credit card to make a purchase until we reach the credit limit. Yes, we knew that, and we discussed about the credit limit point on the credit card statement as well. We have to pay back when you borrowed by the due date to avoid minimum interest charges. So that is there'll be interest charges on this, and there'll be no interest charges on the debit card. And the credit cards often have annual fees. They don't have transactions fees as such, but there will be an annual fees, which you may want to consider while applying for a credit cards as such from the bank accounts. That's it from me, I guess.
Thank you, Bindu, for talking all about credit cards and debit cards with us. I'm sure that many of the students watching have learned a lot from you, because I certainly did. Now let's move on to Raj, who will be discussing financial planning and budgeting.
Awesome. Thanks so much, Vaishu. And thank you once again to BrightBearsInfo for having me. And thank you to all of you for being here. The fact that you're here and you're taking this step to learn a little bit more about money, about personal finance, is so awesome. So congrats to all of you. You should give yourselves a pat on the back for that. So if we jump into the next slide here, the first thing that I want to mention to all of you is that personal finance is not a one-size-fits-all. So I say this a lot, and you'll probably hear me say it like 2 or 3 more times in this presentation. And the reason I do is because there are so many different approaches to personal finance, and there are so many different things that are available to you, as you're going to go through your financial journey, right? So right now, as students, you'll have opportunities that we're going to talk a little bit more about that are available to you. As you kind of go through your life, different things will open up in terms of, again, things that you need to buy, things that you need, things that you want. So we're going to talk about all of that, but keep in mind that you're on your own journey. So if we jump into the next slide here, what is a budget, right? Budgeting is very important. All of you, I think, agree with that because it was one of the biggest words that popped up in that word bubble at the beginning. But what is a budget? So a budget is an estimate of income and expenses for a set period of time, right? And the more important thing, I think, is it's a plan. It's kind of like a roadmap, right? So it's a plan for how much money you're going to spend and where you're going to spend it. And just as a reminder at the bottom, I put here, remember, income is money that you make and expenses are any money that you're paying out. Okay, so keep those two things in mind. All right. So next up, we're going to talk a little bit about why. Now that you know what a budget is, why do we need budgeting? Well, there's a couple of things. First of all, we don't have an infinite amount of money. Sometimes I wish like we did, but we don't have an infinite amount of money. So it's very important to kind of allocate the money we do have, because we don't want to be in a situation where we don't have enough for what we need. We have to prioritize our needs and our wants. So again, we're going to talk about this in the next couple of slides, but making that distinction and being able to be clear on what it is that you need that's essential and what it is that you want that may not be as essential, right? It helps us plan our finances by building a roadmap to our goals, right? So this is something that's very important. The one thing that I would say for everybody that's really important to remember as you go through your financial journeys is make them goal-based. Have a goal in mind, right? So your goal can be things like, I want to make sure that I have enough money that I'm able to pay out all of my bills and all of my obligations and still have money to take care of myself. Your goal can be, one day I want to buy a house. Whatever it is, make sure that you have a goal for your finances. It'll help you work backwards when you're building your budget. I put over here every month, and I put a little star there because you can budget for any time frame. You can make a budget for 1 week. Sometimes people, if you're going on vacation, you might say, this is my budget for my vacation. You can make a budget for a whole year, but the easiest thing to do is make it for a month-to-month basis, because that gives you the opportunity to look back next month and say, what did I do well on and what can I improve on in my budget? What can I change? What numbers need to be adjusted so that I do better this month? So keep that in mind, that budgeting month to month is a great way to do it. And it gives us something to work towards. So that's obviously, like I said, a goal. When you have a goal, you can easily map out the journey, right? Okay, so jumping into the next slide here, let's talk a little bit about needs and wants. So needs are things that you must have, that you absolutely must have. Wants are things that are nice to have. So let's look at a couple of examples of both of those. So needs are things like shelter. We all need to have a roof over our heads, right? Things like food, we gotta stay healthy. We need food for sustenance, so food is a need. And clothing, we all need clothing to wear every day, right? So that is a need as well. There are tons more needs as well apart from this. And again, you know, every situation is different, but these generally are ones that apply to everyone. If we jump into the next slide, we're gonna look at our wants. And wants are things, like I said, that are nice to have. So fancy phones, laptops, tablets, those are wants. Brand name clothing is a want, and video game consoles are a want too, things that are for our entertainment. Now I want to quickly take a look at the middle one here, brand name clothing. You guys remember that I mentioned clothing as a need, right? So clothing, of course, we all need clothing, but do we need brand name clothing? So there are certain things in all of these categories that can apply to both needs and to wants, depending on sort of what, again, you're trying to spend your money on. For some people, they may need a laptop for work, so that could jump up to their needs. But if they're using it for entertainment, it could be a want. So again, that's why I keep saying it's not a one size fits all. You have to identify what your needs and wants are. And what I would recommend all of you do after today's session is just write a list, put needs on the left side, wants on the right side, and just kind of list out some of the things that are important to you, okay? All right, let's jump into the next slide here. Let's look at some budgeting terms that will come up pretty frequently. These are good definitions to remember because they are terms that will help you as you create your budgets. The first one is income. It refers to any money that's coming in, right? So income can be from a bunch of different sources. You can have money coming in from various places, like having an allowance. Some of you might have an allowance from your parents. Employment income, so if you have a job, if you have a part-time job, things like that, that counts as income. And again, later on in your life, you may own a property and have somebody renting it from you. You may have experienced this with other family members who have that right now. That's called rental income. That's coming in because somebody's paying you to stay in your property or in your house. And investments, and again, you'll learn more about that in the next section of the talk, but investment income is also a source of income. If we take a look at expenses, again, expenses are the opposite of income. It's all the money that's going out. So expenses can come up in a bunch of different categories, and a bunch of different places in your life, but two categories that you can put almost all expenses in are fixed and variable expenses. So fixed expenses are things that you cannot change the amount of. For example, if you're living somewhere and you have to pay rent or you have to pay a mortgage, that's going to be the money that you pay every month. The payment is most likely going to stay the same for a long time, right? Those are not going to be able to change. So when you're adjusting your budget each month, you can't really say, oh, I'm going to spend less on my rent unless you move to a different property, right? So those are things that are fixed. Variable expenses are things that you can control by your usage. So for example, putting gas in your car. Some of you might be driving or just getting your licenses, and putting gas in your car. Again, if you drive a lot, you're going to be spending a lot of money on gas. So on your budget, it's gonna be a huge amount. The next month, you might look back and say, you know what, maybe I don't have to drive all the time and just go for drives with my friends and blast music and have fun. Maybe we can just sort of hang out, in the backyard instead or something like that. And so that will save you a lot of money on gas. So again, that's a variable expense, right? So expenses are a necessary part of your budget, but the real goal for every budget sheet should be to make sure that your income is higher than your expenses. And what that's called is cash flow, right? So cash flow is the amount of money that you have once you subtract your expenses from your income. If your income is higher than your expenses, which is what we want, you have a positive cash flow. That means you have more money than you're able to budget for. If your income is lower than your expenses, you have a negative cash flow. So again, you want to make sure that you have a positive cash flow, right? Okay, jumping into the next slide here. Let's talk about fixed and variable costs. You know what, we kind of covered this already. So in the interest of time, we'll move on. Fixed costs and variable costs, you guys know the drill with that. So there are two kind of common approaches to personal finance that you'll find. One of them is to lower expenses, so cutting down your costs, and the other one is to increase income or increase your revenue, right? What this means is if you're somebody who prefers to lower your costs or lower your expenses, you're going to be looking at your budget every month and seeing how much you spend in certain areas and trying to find ways to lower them, right? If you're someone who wants to increase revenue, some people, I know for me, I like spending, but I also make sure that I spend within my budget, right? But if you're someone who likes spending, maybe you're someone who says, I want to be able to get the things that I want, but I need to make sure I make enough money or earn enough money to make that possible. You'll be focused on increasing revenue. So making sure that, again, maybe you're looking at different sources of money coming in. Maybe you're trying to get a better part-time job or a raise at your current job, something like that, right? Maybe even convincing your parents for a higher allowance. I don't know. That's something you got to talk to them about, right? So remember, this isn't it's not like you got to pick one or the other, right? It's a spectrum. So you may fall somewhere on that line. Maybe you're someone who prefers to cut costs. Maybe you're someone in the middle who's kind of like, I want to do a little bit of both to balance it out. And maybe you're someone who's like, nope, I just want to increase revenue so that I can spend all the money that I want. Again, there's no one size fits all. So it's up to you to figure out where you fit on that spectrum. And when you try to use one of these approaches in your budget every month, you might find that it worked, or maybe it didn't work, and then you can adjust your approach, right? Okay, so jumping into the next slide here. Again, this just shows the spectrum. Usually I get people to kind of tell me where they are on the line, but picture this and visualize this in your mind and try to figure out where you fit onto this line when you're kind of working on your budget, okay? Or picture it right now, right? You might have an answer right now. Okay, let's jump into the next slide here. So we talked about lowering expenses. And so I want to talk a little bit about how we can do that. The first thing is to focus on your goals, right? Having a goal is a big motivation to help you lower your expenses. If you say to yourself, you know what, I really want to buy, like, the new PS5 just dropped. I really, really want to buy a PS5. That is a goal. I mean, it's a want, but it's still a financial goal that you might have because you're saving for an item. Because you're saving up for that item, you might be like, you know what, I'm not going to spend like that extra money on a junior chicken from McDonald's, or I'm not going to spend that money on something else because I'm saving up for a PS5, right? So you really want to make sure that your goals influence your decisions on where you cut costs, right? The next thing is to reassess your needs and your wants. So every month you're going to do this, guys. Think about what it is you need, what it is you want. Make sure your needs are covered first. And if your wants are being covered and there's some wiggle room, maybe you lower some costs over there, right? The next thing is to find appropriate substitutes. So this is an interesting one. You might be buying something, and you find this a lot with, for example, groceries and things like that. Maybe unbranded cookies taste better than Oreos, or they taste the same. So instead of buying the branded item, you can probably cut some costs by buying something unbranded, but still getting the same satisfaction out of it. So look for substitute products and substitutes for things that you need and want that might fit better within your budget. And as a bonus, I always say practice by trial and error. So you really want to try to cut back in different areas every month. If you cut back 1 month on, again, snacks, and you're like, you know what, I don't really like the substitute products, you can adjust the next month. So it's all trial and error to figure out what works for you, right? In the next slide, we're going to talk a little bit about increasing income or increasing your revenue. So diversifying your income is a great way to increase your income. You've all heard the phrase, don't put all your eggs in one basket, right? Basically, they say that because if you hold a bunch of eggs in one basket and you drop the basket, all the eggs break, right? So you don't really want that to happen. And we've seen this happen, guys, with COVID-19 during the pandemic. I'm sure all of you have heard about what's going on in the world in terms of finances, where people have lost their jobs, and you know, some people are going through situations where there's kind of, you know, maybe in a struggle financially. If you diversify your income, that can sort of protect you against maybe losing your job or something like that if that's your only stream of income. So you can, again, find other work. Some people do, you know, multiple jobs that, you know, if you have the time for it, then maybe at least even if you lose one, you got another one lined up. Again, through rental income, I talked about that before, may apply later on in your lives, or even a side hustle. I love this one because this can apply to you at your age. I've seen some high school students doing amazing things, selling art on Instagram, you know, baking cakes because they're really awesome bakers and they're making some money. So you can literally do this at your age right now, start a side hustle and maybe have some money coming in from that, right? The next thing is to make good investments. So invest in areas that will generate regular income. And again, that's something that I think we're going to talk about. Vincent's going to cover a little bit more in the next section, but make good investments. And the last thing, again, something you can do right now at your age, sell things that you don't need. This is a huge one, guys, because the amount of people that I talk to and high school students that I talk to that are like, I have so much stuff because 3 years ago I was into different kind of stuff and now I'm interested in something completely different. My hobbies have changed, my life has changed. You might have a lot of things that you're sitting on that you don't need anymore. So selling that on something like Kijiji or Facebook Marketplace is a great way to, first of all, make money, and secondly, declutter your spaces at home, right? So it kind of is a win-win on both those sides. Let's jump into the next slide over here. Okay, we're going to talk a little bit about budgeting categories. So again, when you write down a budget, you're basically just writing down all of these categories on a piece of paper and writing down which expenses you have under each category, okay? And then you're going to total all those numbers up, and that's going to be the amount of expenses you have. And you got to make sure that that number, again, is hopefully lower than your income, which is the money coming in. So budgeting categories, the first one is housing, so the cost of living. Right now, you may be lucky enough to be living with family, living with parents. But if you're not, and as you maybe go into something like university or college, you may be living, you know, away from home, right? You may be living on campus, on residence, whatever. So the cost of housing is something very important to keep in mind. The next thing is transportation. So the cost of travel, whether you get around using a car, bus, a bike, whatever you use to get around. This one's important because if you use a car, for example, there are other expenses that will kind of fall into that category, like gas, insurance, and the maintenance and repairs of your car as well, right? So food, the cost of all your food, groceries, restaurant bills, like I said, all those junior chickens, they add up, and so all of your food should be recorded on your budget sheet. Clothing, pretty self-explanatory, the cost of clothing. Medical expenses, so these ones again, and in the interest of time, I'm not going to kind of jump into too much detail, but for example, something like a pair of glasses. It's not like you're buying a pair of glasses every single month, but what you want to do is say, how much do a pair of glasses cost? And then divide that up by 12 months and just put a little bit of money aside for it every month. Because if you're saving regularly for that medical expense, then when it does come up, all of a sudden you get an eye test and maybe you got to get a new prescription, you have money that you've been saving every month for that item, right? The next thing is hobbies and entertainment. So again, the cost of your hobbies and anything you do for entertainment. And then the last two, which I would say are probably the most important on this list, are savings. So make sure you have goal-based savings, which means, again, buying a specific item, saving up for your education, whatever the case may be, and put money aside for that. And the last is an emergency fund. An emergency fund is a type of savings as well, but it's specifically for emergencies. So you're not saving it up to use it to buy an item. You're not saving it up to use it for something. You're saying, I have this money for a rainy day. In case something comes up, I'm going to have this money available to use, right? And so you always got to be prepared for the what ifs in life. I put here to save at least 10 to 15% of your total income, which is a good place to be when you're looking at your emergency fund. Okay, in the next page, I'll just give you some final tips as a recap, and then we'll very quickly just touch on some more banking stuff. But essentially, you want to identify your needs and wants every single month. Remember to take care of your needs first, and then if you have money left over, allocate them to your wants. I want to really quickly say wants are not a bad thing. So don't feel bad if you want stuff. Wants are really good for, they can bring you happiness, fulfillment. You get joy out of some of the things that we are able to buy in life, but make sure you're taking care of your needs first, because that'll make sure that you really are happy about buying your wants, right? Identify your financial approach. So are you someone who lowers expenses, increases income, or somewhere in the middle? So make sure you're identifying that, and start a monthly written budget, whether this is physically written down on a piece of paper, on an Excel spreadsheet, logged through like an app, or on your online banking app or platform that you might use if you have a bank account. But make sure you record and categorize all your spending every single month. Okay, very quickly, let's just touch on some banking stuff and some eligibility. I use this word eligibility, guys, because again, if you're at that high school age, you're already eligible for some of this stuff. And Bindu mentioned bank accounts and banking for students and things like that. So definitely eligible in those areas. And then there are certain things that you're going to be eligible for when you turn 18, like further credit investments and something called RESP. So bank accounts, make sure that, again, if you have questions about any of this stuff, you can go on, and you learned a lot today, but if you have further questions, you can go on each bank's website and just find out what the eligibility is for each bank, because they might have different criteria depending on, especially in Canada, which bank you go to. So you can go in and research that. In terms of credit, you're eligible at the age of 18 years old for a credit card. And also if you are taking advantage of something like OSAP or student loans as you're looking to, look to fund your post-secondary education. I know BrightBearsInfo is going to have an awesome webinar on that topic as well. That's something that, again, you want to be aware of all of what's available to you and what you're eligible for as you turn 18. Investment, same thing. And again, Vincent's going to cover a little bit more about that. And the last one is RESP withdrawal. So this is important, guys. If you are a student and you're kind of pursuing a post-secondary pathway like college or university, your parents might have something called an RESP, which is a registered education savings plan that they've been putting money into maybe since you were little to save up to fund your education. If they have something like that, it's really important for you to know it, because you need to get different forms from your school and things like that every time you pay tuition, and you need to save all of your receipts for everything to give to them. That way they can use their savings to pay for your education. So one thing that I would definitely recommend is talk to your parents and ask them, do you have an RESP, so that you know what to keep and what to hold on to as you go into your post-secondary education to assist in that process. Okay, so I'm going to wrap it up over there, and I'm going to pass it back to Vaishu and Sophie. But thank you so much again for having me, and I'm looking forward to hearing your awesome questions in the Q&A after. Okay, thanks, guys.
Thank you so much, Raj, for some great tips. I will definitely put them into practice, especially selling things that I don't use anymore to make extra money. Also, now I know how to prioritize what I actually need to buy versus what I want. So thank you. Now we will be hearing from Vincent, who will be talking about compounding effect and financial habits. And if you have any questions for the Q&A, you can start typing them into the chat, and we will be answering them right after we hear from Vincent.
All right, thank you, Ashu. And Raj just did an amazing job. I mean, sharing a lot of very helpful information for all you guys. So, as a final speaker, I just want to kind of like summarize, what they have to share, and then share some tips so that we can actually start taking action at young age. Okay. So the first thing I want to mention is that if you want to save, you always save early, right? And I will actually expand, show you guys an example why we need to do that early, and how we actually can save early. As Raj mentioned, a lot, we gotta have budgeting, which is keep track of expenses, and also distinguish your needs and wants. Right? I won't spend too much time because Raj already shared the importance and how we actually do it. I want to share one tip that how we can actually avoid impulsive purchasing. Right? I don't know how many of you guys experience that you buy things and then you never use it, right? After you buy it, or maybe just use it once and that's it, and put aside, and you totally forget about it. And actually, I have two tips, right? The first one, if you really want to buy something before you make a decision, you can actually wait for a week, right? If that something that you cannot really wait, usually is something that you need, right? If you wait for a week and still want to buy it, then maybe you can buy it, right? I think there's nothing wrong with things that you really want, right? We all have things that we really want, but may not necessarily be our needs, but nothing wrong, right? We get what we desire and we feel happy about it. But yeah, and in that way we can actually reduce a lot of like redundant purchasing, or buying things that actually because of the emotion, right? And the third point I want to share is that consider saving is paying to yourself, right? Um, we spend money. Actually, we are paying for the products or service, merchandise, right? However, how many of you guys considering actually paying ourselves first, right? How important do you think ourselves? Right? How much do you think ourselves worth? And there's a term called instant gratification, right? And also versus delayed gratification. I mean, instant gratification is human nature, right? We all want to enjoy the moment, right? We want to have the enjoy the emotion, positive emotion, or happiness, satisfaction right now instead of tomorrow. So that's also why money worth more tomorrow. And really, if you can delay that gratification, then we are potentially getting a better return, right? Some examples of the instant versus delays, like we can, have fun, watch Netflix, playing video games, right? Those bring us instant happiness, right? Or maybe satisfaction, right? Something like, study, work, investing. Those are delayed gratification because usually the benefit come out later on in our life. But however, those action, those behavior actually generate more result for your life, right? If you look back. So there's I also like the saying from Warren Buffett. Actually, it's quite simple, but it's just a lot of wisdom in it, right? So do not save what is left after spending, right? Instead, spend what is left after saving. And also, I think that's also one of the um, uh, most significant, habit, right? Distinguish the poor from the richest. So that's really important. Always pay yourself first, save first. And the last point is that once we start saving, we need to keep doing it, be consistent, right? Like according to the 7-day rules, which means that usually as human being, on average, it takes 28 days to form a habit. right? It can be a good habit or bad habit. And by the law of polarity, we never create a habit, right? We just keep changing our habit. If you don't save, that means you spend, right? As like human being, we are a collection. Our mind actually is a collection of habits. The quality of our life is determining the quality of our habits. So what kind of life that you want to live? That's the question and decision that, right, you to make. So we can jump to the next slide. And the next one, I want to share why we want to save early, right? By showing an example of compounding effect. And if you look at this the spreadsheet that I did before, for the scenario A, which is the left-hand side, we assume that the annual rate of return is 12%, right? In the scenario A, the green one, we only save for 6 years, consecutive 6 years, first 6 years, for $2,000 a year, right? The total contribution is 12,000, and however, after 40 years, our total accumulation is 959,000, so close to $1 million, right? Now consider if we don't save from year one, we delay it, right? We start saving from year 7 and keep saving $2,000 until 40 years after. So which is the total contribution is 68,000, right? We save for 34 years. Now the total contribution is 861,000, right? It's still less than the scenario A, right? This is, I would say, a pretty straightforward example showing the power of compounding. The reason is being that compounding actually means exponential growth, right? It's not linear. The early contribution actually take a heavier weight to your whole contribution, right? If you can accumulate money at an early stage, actually can save out more efforts later on. So that's why we're gonna do it early, right? Do it today. And the second tips I want to share is that as young people, we can start building up our credit score early. So Bindu have explained what is the credit score and credit report, right? I will just mention it again. Credit score basically is an evaluation system, right? It's a metric, ranging from 300 to 900 points. The higher is better. So why we need to have maintain or build up a high credit score, right? Because credit score actually is very closely related to our daily life, right? When you apply to credit card, you want to increase your credit limit, or when you want to buy a home, right? You apply for the mortgage. You want to lease or finance a car, right? And even for some company, if they hire people, they would like to check your credit, right? To see your history, to base on that to make a decision to hire you or not, or keep you working for them or not. And also when you want to rent a house, right? Instead of buying, if you want to rent, the owner of the property have the right to check your credit, right? And also for some parents, I'm pretty sure, and most of people attending today from Canada, fortunately in Ontario, the insurance part, if you want to buy a house insurance, car insurance, they don't check your credit. But so for some parents in the States, and they may check when you want to buy insurance, they may check your credit, right? Those are the area that you're going to face very soon. So how do we actually maintain and build up a high credit score? The first one is that you always want to pay our bill on time and in full amount, right? Not the minimum amount. Of course, if you pay the minimum, it's better than not paying that on time. But in order you can build up your credit score, you always pay it in full amount and on time, right? That's really, really important. And the second one is that try to keep our usage of credit under 35% of the total credit amount, right? This is actually the area that not many people pay attention to, right? The one example is that, right, if we spend use $100 out of the $1,000 out of the 2,000 credit, we're actually using the 50% of our total credit. However, even I spend more, for example, 3,000 out of our total 9,000 credit, the usage is only 33%, right? In that case, actually, the scenario B will increase our credit more than the scenario A. And the third one is that the longer credit history we have, the better our credit score will be. So one of the action that we can take is that as long as we are eligible to apply for credit card, we do it, right? You may not be necessary to use it, but I would also suggest that you start using it so that you can apply for the tip number 1, right? As even though you spend maybe buy coffee a couple of dollars every month, and you just keep purchasing and pay back full amount, then you start building up your credit, right? So use your credit card early and pay it in full amount. So now come to my 4 tips. And this one is that essentially is if we have more types of credit, then the credit score will be higher. So instead of just having credit card, if you have mortgage or you have a car loan, right? And you may have personal loan, or once you have house, that you can open a line of credit account from the bank, which is the refinancing the home. If you have all this credit source available or reported on your credit report, then actually we increase your credit score. And the last one is that try to limit our credit check behavior, right? One of the most significant one is the apply for credit card, right? Every single credit card that we apply, the bank, they mandatorily check our credit, and each credit check actually will decrease our credit score. And also for the employment, some of the employer, they will check our credit. But of course, that one sometimes we just cannot avoid. But but those are the area that we can pay attention to. Okay, and I think I would say that the last point, today we talk about share a lot of those useful tips for you guys, information. Those are all about how and what to do, right? I want you guys to think a little bit bigger and long term, right? Why we actually need to have a good financial habit, or why do we need to know those financial knowledge, right? Maybe, right, as Raj said that we always have some financial goal. We have some wants that we want to achieve, right? I have a goal that I want to buy a PS5, right? Or maybe some branded clothing, right? I'm long enough want to have, but think long term, right? Is there a community that I want to contribute, right? How about we retire our parents early? Is there a dream house that I want to buy, maybe a car, right? Is it a lifestyle that I want to live? How about retire early? Is there a business that I want to own? Right? If once you have a bigger why, your decision will be firmer. You'll be more consistent, then you will be closer to your goal, right? Once you have a very crystal clear goal and you have a definite, executable plan, right? Those are the two very necessary steps to achieve your goal, right? So that you can evaluate yourself, keep asking yourself, right? Is there your current habit help you to move closer to your goal or further away from the goal, right? I always think this is very helpful for me to make my decision, right? Not only those like financial decision, but many life decisions. And I like a saying that financial independence actually is a decision, right? Not a dream. And retirement is not actually is not about age. It's about money that you have, right? So think about that. And I hope today's sharing can help you guys and wish you guys all the best. And I will give it back to Rashu.
Thank you, Vincent, for sharing with us all about the compounding effect, credit scores, and some good financial habits. I'm glad I got to learn something so new, such as the compounding effect, because I've never heard about that before. So now we're going to be moving on to our Q&A section. And the first question that we have is from the chat. And I guess Raj can answer this because you talked a little about our ESP. And this person asks, what if my parents don't have RESP withdrawals because we are immigrants from another country? So what do we do?
Yeah, absolutely. That's a great question. So RESPs, again, are if you were, either, born here, or you grew up here, you've been here for a while, your parents might have them. If you're new to the country, there still are a lot of programs available to help you fund your education. So I would then look into something like grants and scholarships that exist. A lot of them are academic based, but then a lot are also based on just need, right? You may fit into the eligibility criteria of a grant because maybe you're new to the country, you immigrated here recently, things like that. And one thing that I will say is, I don't know the exact number, but I read it a little while ago that it's something like the majority of grants go unfunded or unused. So there's tons of money out there, guys, that's available to students for education. Look into those options. And then again, beyond that, you have provincial, federal student loans that are available to you to fund your education as well, right? But first look at grants, because grants are money that you don't have to pay back, and loans are money you do have to pay back. So always look for grants first.
Yeah, thank you. I heard that too, that like there are a lot of grants and scholarships that people don't apply for, and so they don't give out. So that's definitely something that us students can do.
Our next question is for Bindu. So someone asked us, if you are using a credit card, how do you exactly pay back?
That's a great question. So you can pay it online. There will be an options available online. So as I mentioned, you might have to open an account with the online account. So you can actually make a payment online. So I think that should be the answer.
Thank you so much. Yeah. Okay.
So another question that we have here, and Vincent, you could try answering this. Will opening a bank account for my kids affect college admissions in Canada, the USA, or anywhere worldwide?
So the question is, opening a bank account, will that affect the admission for the school?
Yeah, for college admissions or university admissions.
So I don't know in other country, but in Canada, that there's no effect.
No effect in US as well, I guess.
All right, thank you so much for answering.
And our last question for this webinar is, what are some of your financial regrets? So just like maybe a sentence or 2 sentences. We'll start off with Raj.
Awesome. Yeah, that's a great question. I think my biggest financial regret is just not learning about finance earlier. So again, I said this before, you guys should give yourselves a pat on the back for doing something like this, because learning, and you've all heard that knowledge is power. If you learn about this system and the way the financial system works and what your place is in it, you'll be able to make a lot of really, really great decisions as you go through your financial journey, for sure.
Yeah, that's great. Yep. And Bindu, do you have any financial regrets throughout your financial career?
Yeah, so the only thing I have regret is I did not make proper investments. I just have savings in the account. So I could have started my investments. I mean, even now I have savings, but I could have done more, the money can earn money by making the investments, which did not happen in my case. I think that's my biggest regret.
And Vincent, lastly, do you have any?
Yeah, my one is actually quite similar to the Raj one. Is that if I can know about financial literacy at younger age, I can realize, how money works, and also maybe I'm able to be, clear about my financial goal early on, right? I think most of people at young age, they just have no idea what do we do with the money, right? What's the plan? And so I think that's also the one of the most common reason. They, I have money, I just spend it, right? Otherwise, I don't know how to deal with my money. So I think, yeah, if I can know those parts earlier, then you make a significant difference right now. Yeah.
Yeah, so in that case, I think we all are lucky to be learning about this now, because we learned like amazing information from all of you guys. So I guess we're lucky to know a little bit about financial literacy and how to maintain our money. So thank you guys for that once again.
And we actually got one more question in the chat. And Raj, I think you can answer this again because you talked a little bit about retirement. But they ask, will my substantial retirement fund affect my scholarships or admissions?
Sorry, Sophie, can you repeat that? It cut out for 1 sec.
Oh, yeah, sure. Will my substantial retirement fund affect my scholarships or admissions?
No, a lot of, again, like I said, a lot of scholarships are academic based, or again, so you have 2 different types, right? Ones that are merit based and ones that are based on other criteria, based on categories and things that you might find yourself fitting into. Generally, savings, and I know somebody asked that about even bank accounts before. Will it affect anything to do with that? Generally, it doesn't, right? The only thing when it comes to, I guess, your own money situation that could affect a grant or scholarship or an admission is, a lot of the times when you apply for loans or even certain grants, they'll ask you what your household income is or what your family income is. So if your family income is over a certain amount, which means if your parents, let's say, are making over a certain amount of money, you may not be eligible to get that grant because they are basically, they're giving it to people who may not be able to afford education through their parents' savings. So that's really the only thing that you should watch out for. Other than that, no, it wouldn't affect it.
Okay, thank you so much. I hope that helps a lot of the students that are watching right now. But unfortunately, that is all the time that we have today. Let's have a virtual round of applause for our panelists today. We want to thank Raj, Himabindu, and Vincent for taking the time out of your days for joining us today. And if you enjoyed this webinar, then please make sure to recommend our future webinars to your friends. And remember that if you have attended this webinar, then you are actually eligible to enter our March giveaway. and the winner is going to be receiving a $25 gift card of their choice. And you can follow the rules on our Instagram page to enter. But make sure that you do enter soon because the giveaway is closing today at 11:59 p.m. Eastern Standard Time.
You can also connect with us on Instagram or any of our other socials if you're looking for more opportunities such as today. Check out our Instagram page, which is where we will be posting weekly opportunities and updates. We also have future events planned, which will be happening during the course of this year. Our next monthly event will be happening in April, and this time it is going to be a contest. In April, you will get the chance to create a video showcasing your dream career in the most creative way possible. The winner will be receiving a gift basket worth up to $50 and a chance to get featured on our YouTube and Instagram page. So be sure to stay on the lookout. Our executive applications for the year 2021 to 2022 will be opening very soon. Stay tuned and make sure to apply to be part of BrightBearsInfo.
We will also be posting a recording of these webinars on our YouTube channel, so be sure to check out the webinars if you missed any of them, and don't forget to also subscribe. I want to thank all of you for attending our third webinar of the year. We hope that you all learned a lot from our guests, and so stay tuned, and we hope to see all of you soon. Bye, everyone.